Hello and welcome to today's morning report on Friday the 28th of October with me, Richard Perry, market analyst at Handtech Markets. We've got a pretty negative sort of look to the equity markets today. European trading is sort of down quite strongly across the board, about just over 0.5% on FTSE, almost 1% on DAX. And that's sort of coming as volatility is increasing, interestingly, because we're seeing a lot of moves in the bond markets. Let me just show you a few charts that might find interesting. VIX index volatility up again, back above 15 now. So markets are sort of taking on a little bit more of a corrective look on this as the treasury yields, well, bond yields generally, but treasury yields are pushing out strongly. Yesterday, really strong move on the 10-year treasury yield and also the 2-year. Now, it could be that across the board, pretty much. Bond yields around the world are pushing higher, but certainly UK bond yields were pushed out yesterday on the release of the better than expected growth data for the UK. But generally speaking, it seems to be that perhaps traders are, this is the German Bund, which is now well above zero, and sort of questioning whether the extension of quantitative easing or easy monetary policy is going to be continuing. Certainly the Eurozone and the UK is being questioned, and certainly whether the UK will continue to cut rates. Certainly in the November meeting is the question that's being asked. Now, that is impacting, and certainly the dollar has reacted strongly. It continues to push higher with that strengthening of treasury yields. Interestingly, that we're seeing the oil price, which remains under a little bit of pressure. That's again helping to sort of dampen market sentiment for equities. Questions over the potential for OPEC to implement this agreement of the oil production cut, and that is certainly impacting, as I said, on sentiment. So quite a lot going on in these markets at the moment, and we're looking out for US GDP today. US GDP has been or will be sort of a guide, I think, to whether the Fed is likely to sort of confirm whether they're going to be hiking interest rates in December. The interest rates, according to CME Group FedWatch, are around about 75-76% probability now is priced in for December. And what we have got is GDP data for the States today, which is expected to show advanced GDP increasing to 2.5% annualized. Now, obviously, that's higher than the 1. Well, it's actually revised to 1.4. Annoyingly, this is the this is the advanced reading for last quarter, but it was revised to the final reading at 1.4%. But 2.5 would be a strong number for GDP, and that's likely to sort of confirm. Well, I say strong, that's much better than where it has been anyway. Would likely confirm a December rate hike. Now, we've also got the employment cost index at 130, expected to come in at 0.6%, so nothing too incredible there. And also the final reading of Michigan sentiment, expected to come in at 88.1. Now, this is the final reading for last month, 91.2. The flash reading was 87.9, so that's a mild improvement, but still back at levels not seen since, well, September 2015, really. Yeah, that'd be an interesting move there. But certainly there is some key moves that we're seeing on these bond yields, and that is impacting through markets today. So my chance today is the euro yen. Now, the yen has come under pressure against the dollar, breaking out on the dollar, and now it's breaking out on the euro. That's yen weakness, euro yen rising. And you look at this chart and you'd say, well, this is actually a range play in the last few months, isn't it? Going sideways. Markets where the RSI hitting 40 basically every time. That's where the support comes in. Going up above 60, 63 back in August, 63 back in October early. So there is upside potential, currently at 55. So I think this one could well be continuing higher towards the top of that range, really. 116.35. Now, as I said, dollar yen has sort of broken through these equivalent levels. So I think that's well within the realms of possibility. 116.35 are these sort of key resistance levels that we've seen coming in for September and October. So possibly a rally back towards there. And you look on this hourly chart and you say, well, this is actually a minor little near-term head and shoulders reversal pattern above that 114 pivot. you could measure that around about 140 ticks, and you project that higher from 114, so that gives you 115.60. So there is again still further upside potential in this move. Look at these momentum indicators, much more positively configured now. All the Allen moving averages rising. It's positively configured on the momentum, so you'll be buying into any sort of weakness, I think, on this euro yen. You've got the initial level of support that comes in from today's low around 114.55 area, but obviously 114 big figure was the sort of breakout pivot. So that certainly seems to be that we are posting a series of higher lows on euro yen, and I would be expecting another higher low. Now you'd got the 55-hour moving average, which is not the worst sort of basis of support, and that currently comes in at 114.12. So there is a prospect of a little bit of a near-term correction possibly, but I would be using that as a chance to buy. So I wish you good luck in your trading today. You've got resistance around 115 figure, and then up towards 115.18, is it? If I can get my crosshair on it. 115.17, and then 115.80 is this rally high that we saw at the beginning of October. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.